All right, all right, all right. Back at it again. Back at it again. All right. Video seven. Seven. Um. All right. We're does basically start off where we left off on video six with Euro USD. Same thing. I have it marked up here already. Uh, just we had that 4 hour break of structure. Let's go to the 4 hour chart. We had this high, and that's the highest point on the chart, right? That's the highest point on the chart currently in the current situation. And then this last two candle formation, we broke structure with this candle right here, and we came collapsing down on the 1 hour here. And if I zoom in, see here, I'm gonna give you major tips right now, right? Pay attention. When it comes down, of course, this is the candle that broke right over here before all this happened. Actually, let's not do the bar replay because I know sometimes the video doesn't play well with that. Um, because I am on TradingView. So all right, so price came down. We didn't hit the negative 27 yet, and that is the area that I want to see hit. I mean, it said negative 27. It's 23.6 level. My bad. Um, so we don't get a nice pullback, and we still haven't gotten a nice pullback yet. It's just been doing impulsing. A pullback would be a nice, at least a 23.6 level to get hit. Um, but until then, we're waiting. And of course, if it makes any new two candle formation down here as it's impulsing, that would be the next break structure point for the 1 hour. So we got to be careful with that. Now here, you can see, oh, there's two candles right there, Kingsley, and they're blue. Well, if you look at this candle right here, and you look at the numbers here for the beginners, if you don't know, how the trading view works, we have the open, which is the O. We have that number. You have the H, which is the high, and that's not that number. You have the low and the close. Open, high, low, close. Open, high, low, close. Right now, each candle, like as I move my cursor around, and I move it to each different candle, it's all give you a different number, different numbers for different number sequence. So if I go on this candle right here, you can see from the open and the close, it's the exact same number, right? And that is what you call a doji, right? If that number is not higher, then that closed number is not higher or lower than the opening number, it's a doji. A doji means it's neutral. It's nothing really happening here. Yes, it did a major move down, little move up, but how it opened and how it closed, it closed exactly where it opened. So that's a doji. We don't count dojis as a two count formation. I don't. Um, so for that being said, this is now the new low, and the last two candle formation on the 1 hour chart, right, would be all the way over here. These two candles, and from these two candles to the one that's closest to the left, from those two candles, what's the highest point to the right? Is our breaker structure point right here, right? This candle right here, this wick, boom. And I always do it from the wicks, always from the wicks. Not I don't do that body stuff like other traders. I'm wick central. So I count the wicks as breaker structures, not the bodies. All right. Now, if you do something different, hey, I can't. Hey, that's your different results right there, right? If you want to do the same thing, get the same results that I've been getting, right? You gotta do the same thing. It's that simple. um, but hey, it's your trading, your account, your money. Do what you please. But hey, I'm just showing you exactly how I trade, and you take it from there. That's simple. Um, so yeah, just chilling, we're waiting for a pull back to that 23, and then we could set things up. Now I have it here written that a 4 hour break of strokes. I did write this a while back, but I just refreshed that. So I did 2%. So for this $6,000 account that I have here, a live account, I'll be risking $200 to make $100 on this trade, this next trade, and how I'll be entering. Well, first I need that 23 to be hit, and once that 23 be hit, so let's say if I get this scenario, boom, I get this. I want this 23 to get hit, and as long as it doesn't go higher than I'll say this point right here. Hold on. So let me set it up exactly how it was set it up. I'll measure it out with this being negative 27, 5, 4, 2, 4. So if as long as it doesn't go higher than this point right here, then we're good to be in this trade, right? Now my entry is to be entry is to be very simple. It's to be right here at the negative 27. Stop loss at negative 78.6, and TP at the 0 point on the fib. And I'm basically waiting for this thing to come down, hit this operation right here, and then come right back up. That's what I'm waiting for. And for probability, now that's the strategy. Now the probabilities wise, right? Why am I doing this? Yeah, we're everything's aligned with structure going down, but you remember trading is a probabilities game. So you read the probabilities. Here I have one, right? I have 1, 2, and this is bullshit. It's basically irrelevant. This thing, I believe it's a different setup because I have a 1-on-1 situation here. But hey, that could be a scenario, right? So yeah, it could be 1, 2. I get that mini win right there, and then we have this win right after it. Then after that, we also have this win. Remember, these are irrelevance because they didn't hit the negative 27, but we print them out on the chart, and I will wait for this thing to finish. I gotta always wait for them to finish, right? Then when you finish, you catch up back to the current market structure. And we've been up structure since, and we finally came down on the 4 hour chart. It's been some time. Um, yeah, the 4 hour broke structure here. Oh no, it didn't, because here we had this big uh 4 hour situation that we were currently in, and then we finally made this new high, and then we finally broke structure. That's what happened, and now we're looking to take this thing like that. All right, that's simple on Euro USD, right? Moving along here, but until then, we chill. This one, this is a CAD trade that I actually took on here on my Blue Jay strategy, right? So I have my Robin trap strategy and my Blue Jay strategy. Now we do have a Robin trap right here, where we had this win, and then the mini win right here, which I took advantage of. I took this trade. I risked $200 to make $100 on this trade, and we smacked the shit out of it. I can actually show you that. It's this trade right here. You see, yeah, this trade right here. We sold it. This is the sell order. This is the open of the sell order, and this is the close where we close it at that $100 profit. Very nice. After commissions, we have 101. So yeah, that was this trade right here. Smacked it, and yes, We did good. And what I've been doing on this $6,000 account, I've been making $400 withdrawing, $400 withdrawing, $400 withdrawing, building the bank account and not the trading account. But yeah, if I want to get more profits, hey, I'm gonna expand the trading account more, and I could, yeah, I'm okay risking the way I'm risking. I really don't risk no more than 400 on this account per trade at least. And I just that's just my appetite with with this trading account. What I'm comfortable with risking. It's all about what you're comfortable with risking. I do not risk the whole account. I'm not like that. I'm not reckless like that, man. I always count in probabilities, but I'm smart about it. Always risking right properly, right? I risk $100, $200 to make $100 on this one because we're close to the this one. But now as we get a little, after that trade, I will risk $100 to make 50 bucks on this one. But of course, I'm not in this trade because this is the Blue Jays strategy setup, and I was pretty much good here. This is where I made the $200 right here. With the 150 was basically 150 I made on this trade, and then I had this entry and this stop loss, basically a 1-to-1 for the 50 bucks, and I made that right there too. I'm showing you all live account. um but yeah, I'm just now I have this advantage. I have home advantage, right? I can take this entry the moment the market opens and go for that sell. Hey, I'm not. I really don't care. It's 50 bucks and I'll be making on this one. Yeah, whoopie do. But yeah, I can avoid taking a loss and just watching the thing play out and just let it play out. If it plays out and I miss this loss, okay. But now I have a new situation. I have another one of these, and I can go for another one of these, and I have more confidence in going more, for that one because why? I just avoided a loss there, and okay, probabilities the next one's all win. Right? So that's all I'm doing on USD CAD. AUD USD, waiting for a 4 hour break of structure, but I'm chilling out, skipping this next move. So I'm skipping this next setup. Regardless of what it comes out to, I'm skipping. And I don't even have an alert on this the break of structure line because I don't need it. I don't need to be informed to this market right here because I'm done with it until it does, it gives me one of these or at least two more of these, right? I took everything I wanted from these pairs and I'm done, I wait for the reset. Wait for the reset. Next, GBP USD. I am taking this one. That's what I have set up here. We've waited for a 4 hour break structure, and how I'm going to take this one is Robin Trap, risking $100 to make 50 bucks on this one, and going the wrong way on this one. So why I'm going the wrong way? I have this nice giant win right here. I took advantage of this one, made profit, right? I risked $200 to make $100 on this one and nailed it. Made that $100, and now I can risk $100 to make 50 bucks on this one, right? And again, same scenario, like Euro USD. I'm just waiting for a pullback to the 23. I don't count this candle because this candle closed like right here. I need to see the next candle open and touch first without going past this 0 point, and it hasn't been doing that yet. So rightfully so, we're still in this situation forfeit, right? And if it continues going down, yeah, there's no two candle formation here yet, so we'll continue down with it, right? We'll just continue to extend this until it makes a new two candle formation down here. But until then, this is the last two candle formation, and this is the high, and that's the break of structure point on the 1 hour chart. That's simple. That's how simple it is to read a market to me, man. It's been 10 years coming in to get to this point. Yeah, it's a grind, but it is 100% worth it. Same thing here. I'm chilling out. Waiting for a 4-hour break structure down, but it looks like we're up structure right now. On the 4-hour. Daily, we're still in down structure. Weekly, I believe we're still in down structure. We haven't broke structure yet, but it looks like it could break structure soon. And monthly is also still down structure. So yeah. And again, we're avoiding this next opportunity where it lies. Waiting for a break of structure on NZD USD. And I can see here clearly there will all be risking $100 to make $50 on the next trade because we had this win, and then would have been the risk of $200 to make $100. Nailed it, made $100. This one, we're waiting for a 4-hour break of structure as well. This one's a little different, and reason why is because if I scroll back here, I got a win, too many wins next to it. Win, too many wins next to it. Win, too many wins next to it. It did that 3 times. It did that 3 times. That pattern 3 times. So we have a win. What's our chances are on it doing another 2 wins like that again? And probability wise, I know the market is highly unlikely. It still have to switch it up soon. And how it starts switch it up, it started giving me one of these in the next 2 trades. If it's not on this one, it started be on the next one. And if I'm wrong, I'm wrong. But if I'm right, there it is. There it is. And for that being said, I'm risking $50 to make $100 on the next trade because I have 3 patterns of right way, wrong way, wrong way. And that's what I'm waiting for on this setup. So when I get this break of structure hit, I know exactly what to do. I know exactly what to do. Euro USD, we're doing the same thing. We're going the right way. Risking $50 to make $100. Now for this scenario, it's a little different. We have the right way, right? Then wrong way, wrong way, wrong way. So that's 3. And then that's 4 right here. So that's 1, 2, 3, 4. And this is where I got involved, and I would have took that loss. So would have got involved, and this would be $25 risk to make $50 loss, $50 to make $100 loss. And now the next one, I technically on the next one, I can be risking $100 to make $200 on this one, but I'm keeping that risk low. And I'm letting that thing play out, playing the long game, right? And plus, I was up for the week, so there's no already made those losses back. Already made those losses back from other pairs, right? So you gotta think smart like that too. It's strategy to this, man. It's strategy. You can't be gun holding on this shit. I hold no grudges to the market. No grudges. And Euro USD, USD JPY is a little different. We've been in this 4-hour structure for quite a long time, since May 3rd. We've been in this thing. We haven't reached there, but something tells me this week the JPY pairs are going to go crazy. So looking forward to that, right? Looking forward to that. And Bitcoin's doing this Bitcoin thing. And we're back at the beginning here that we did on the past videos. You already know the scenario if you watch the past videos. But yeah, that's it, guys. We're fully caught up to the market. Chill out. And I'm going to enjoy my Sunday and wait for a market open. And then we really get cracking.